What's up everybody? Nate here. BlackRock, one of the largest owners of real estate in the world, is saying that a new world order is upon us and that a long-standing recession is coming. They believe that a central bank related recession is coming soon and that the effects of inflation are going to stick around for the foreseeable future. From the housing market to bond yields, nearly everything for BlackRock is pointing towards a new world order. And that could mean some disastrous consequences for the way we live and our entire economy. So the reason why BlackRock economists and investors believe we are in a new world order right now has everything to do with inflation, our markets, and the Federal Reserve. Inflation has become deeply entrenched in our economy, and while the Federal Reserve is doing what it can to kind of lower it by lowering demand and raising its interest rates, BlackRock believes that this is going to send us into a recession because raising interest rates just is not the way to fight inflation. When the pandemic started, a lot of buying habits from consumers suddenly changed as we had supply chain issues and a lot of workers were out of work for a very, very long time. That meant that a lot of the stocks and the markets and the industries that traditionally dominated our economy, well, they suddenly switched and work from home and stay-at-home stocks suddenly took over. Now Americans and people worldwide weren't searching for a lot of your services anymore. They now wanted a lot of goods instead. Well, the big problem that we ran into was, of course, the pandemic itself. That meant that there was economic lockdowns and there wasn't enough people to actually produce all of these goods. That led to a whole slew of problems, one of them being inflation. The other one being the Federal Reserve printing a ton of money all at once to kind of bail our entire economy out of the pandemic situation. They didn't really know what was going to happen next, so they lowered their interest rates to incentivize spending, and they printed trillions of dollars and then handed that out to the economy, which created artificial demand. With all of that artificial demand in your economy, well, now you had a lot of supply chain bottlenecks, which further kind of aided to the inflation problem. And that is why the Federal Reserve and central banks everywhere in 2021 were saying that inflation was merely transitory. Once all of your supply chain issues went away, once people got back to work and economies worldwide opened up, inflation would suddenly disappear. But we have extremely low unemployment right now in the United States. Most people are back to work and those supply chain bottlenecks have largely gone away. So then why is inflation still hitting record highs? Well, according to BlackRock, this is because we have an aging population throughout the entire world, and that means our workforce is really limited on what it can actually produce. Not only that, but there is still a ton of demand in our economy. I mentioned before, but the Federal Reserve printed trillions of dollars. Remember all of those stimulus checks? Well, a lot of Americans invested that money. A lot of Americans held on to that money in savings accounts. We have had really bad inflation over the last few months, and Americans have started to spend that money. They've started to sell off their assets, which means there's a lot more money kind of pouring into our economy. And until that money is used up, Americans are going to continue to spend, which means we don't have the population or the means to produce enough to meet demand. And according to BlackRock, this new world order is going to be the era of moderation. BlackRock believes that there's going to be supply chain shortages and bottlenecks and not enough to meet demand for the foreseeable future. And with inflation still kind of spiking all throughout the United States, the central banks of the world, like the Federal Reserve, are going to have to do whatever they can to bring down and lower inflation, but the only monetary tool that they have is interest rates. According to their 2023 report, BlackRock shows that interest rates are not the way to tackle a lot of your inflation issues. That is because BlackRock believes that inflation at the root right now is caused by production problems and not because interest rates were really low. They believe that because the Federal Reserve is going to have to raise its interest rates really aggressively, well, that's going to send us into a recession because that simply brings down economic demand for money. When they raise their interest rates, well, now it's really difficult for people to go out and get a mortgage, get an auto loan, spend on a credit card, and for investors to put money back into businesses. But the Federal Reserve just does not have control over certain industries. For instance, we have seen spikes in certain industries because of the Russia-Ukraine war, and BlackRock believes that geopolitical tensions could continue to rise as scarcity gets a lot worse and desperation pops up. Not only that, but you have worker shortages in nearly every single country, including the United States, because wages are so low for a lot of our vital industries. Well, workers simply don't want to go out and get those jobs anymore, and honestly, I can't really blame them. Being Being somebody that actually worked a lot of these really hard jobs, well, they're not exactly pretty and they don't pay enough to pay the bills. So many workers just are foregoing them altogether, and that means we have shortages in every single industry, like the restaurant industry, like the retail industry, you name it. That gets a whole lot worse when you send that to other countries, because if you think inflation is bad here, well, it's a whole lot worse in other countries. EU inflation hit record highs over the summer, same in the UK, and the same thing is going on in China. These are vital places where a lot of our goods and services are produced. Not only that, but BlackRock in its report noted that a lot of our supply chain issues right now are because the entire world is currently trying to switch over to carbon neutral energy options. Obviously, climate change has been a big factor for a lot of industries, and many of them are trying to switch as fast as possible, but we just don't have the infrastructure yet in the United States or across the planet to actually support a lot of these endeavors just yet, meaning that could lead to more shortages. The overall thing that you need to take away from all of that is that this is going to lead to more inflation. Again, when you have really high inflation, well, the Federal Reserve typically handles that by raising interest rates, but it can't control geopolitical tensions, it can't control our private companies and their wages, it can't control our climate change initiatives across the world. It can only use its monetary tool of bringing down or raising interest rates. And because it's not in control of those other things, that means it's going to have to raise interest rates really, really high and aggressively, and then keep them there for a very, very long time, something that BlackRock is worried about. Eventually, the Federal Reserve will be able to bring down demand by raising its interest rates. Eventually, people are just not going to be able to borrow money. It's going to be really, really difficult for people to spend in general. That will bring down demand and hopefully bring down inflation, but the Fed then has to keep those interest rates there, so businesses are kind of screwed here, and so are consumers who are looking to get a home, are looking to get a car, spend on a credit card, and all of those things drastically affect our economy and our GDP and the future of our nation. We simply just won't have as much money circulating around, and because all of these other issues are kind of keeping inflation lingering around for longer than it should, well, that means interest rates have to stay high, which could mean a deep recession. BlackRock in its report pointed to a lot of factors that are already happening in the United States. One thing that it's an expert on is the housing market, and housing market values and housing market sales have dropped off pretty much faster than they have in American history in 2022 and in 2023. The only other time where they dropped off this aggressively was back in 1980, and that is when the Federal Reserve hiked its interest rates in response to almost 13 and 14% inflation rates. So the housing market is already responding very negatively to what interest rates are right now, and more than likely interest rates are only going to go up, meaning fewer and fewer housing sales, meaning fewer and fewer investments in the housing market in general. Now, this entire report from BlackRock is not to scare you, and it's not to show that our entire world is doomed and there's nothing you can do about it. The bottom line of this report is to kind of show you that things are changing in our economy and that you need to be prepared as an investor if you want to continue to have success. What worked in the past might not work in the future, which means that investing needs to change, and so does your strategy. BlackRock believes that long-term bonds are not going to be the way to go right now because inflation is going to be sticking around for the foreseeable future, which means those bonds are going to be losing value and investors are going to want to have higher compensation for holding on to them. That's why they're investing in short-term bonds right now, because in the short term, inflation might not get as high and our geopolitical problems and other economic issues might not be as bad in the short term. Their firm, along with Blackstone, another big real estate investing firm, have already pulled out billions of dollars in the housing market because housing values are starting to drop and investors want to get the best ROI or return on investment that they can, and that might not be in the housing market right now. But above all else, I can't tell you, and neither can BlackRock, what the best investment strategy is going to be for you, because every single person is going to have different goals. All I can tell you is keeping up with everything going on in the business and financial world is going to be very important, and then having the financial education to actually take action could prevent you from having a crisis in the future. Nobody knows exactly what the future holds. BlackRock doesn't, I don't, and nobody does on YouTube or in our government. We all just have ideas. So make sure you always do your own due diligence and research before investing in anything or planning your financial future. Incomes are pretty much getting wiped out by inflation right now. We could end up seeing mass layoffs and unemployment throughout 2023. And the Federal Reserve, geopolitical tensions, and aging populations throughout the world are not helping. But financial education allows you to reduce your risks to all of these events. And it allows you to capitalize on opportunities and build your wealth for your family. You have zero control over what happens in the economy and markets, but you do have control over your own money and how you react to all of this. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.